So one of my YouTube subscribers has asked me to make a video on Anand Rathi, and he said in that comment that Anand Rathi is building a nice long base. So what to do about it? So I'm going to approach it my way. As you know, I do five kinds of analysis: comparative analysis, technical analysis, fundamental analysis, liquidity analysis, and market analysis. Okay. So let's have a look at Anand Rathi. Normally, as you know, it takes me less than 2 seconds to reject a stock. But for the sake of making the video, I want to help you understand what is my thought process, what are the things that I look for on the MarketSmith platform to take a decision. It is very important for you to know this. And please understand that you have to take notes. Unless you take notes, you cannot become a professional stock trader. Just by sitting there watching videos is not going to help you. I also have a lot of students on my video course. They go through the course so fast that they don't end up learning anything because they do not take notes. See, you have to watch each video twice and then you take notes and then you take the time to think and then you look at charts and see whether that is applicable in practical real life or not, and then you go to the next video. This is extremely important. Just rushing through the video course, just rushing through the YouTube channel is not going to help you. You will go from one system to another system to another system to another system, and this will happen every 6 months. So you will not end up mastering one particular system. Remember, Mark Minervini has been using the VCP pattern for more than 35 years, close to 4 decades now. So that is very important. He talks about something called as style drift in his book. I think he talks about style drift in his second book. Style drift means you look at a particular system, you start applying the concepts, but over a period of time, you realize that it is not easy to trade with the system. And then you go to some other system which might sound easy or look easy. But there again, you realize that that is again not working for you. So you keep changing styles. And that is the problem. The problem is not the system. The problem is you. You are not putting in the hard work. You are not taking notes. Okay. I have notes, like notebooks filled with notes, right? But I don't have to refer back to them again because I have created so many notes that now I can remember what I wrote. I can understand what to look for on the chart. So Anand Rathi, it wouldn't take less than a fraction of a second for me to reject a stock, but for you, I have to give a proper explanation. So this is Anand Rathi Wealth. So the moment I open the stock, okay, let me first log in. Yeah, so Anand Rathi. See, this is the value of education. Somebody is asking me, Rohit, what should I do regarding Anand Rathi stock? It is forming a long base. But have a look at the relative strength. Okay, relative strength here it mentions 55. Here it is mentioning 64. I don't know why that is. Maybe some error in mentioning the relative strength. But I wouldn't even touch a stock which has a relative strength of less than 70. Okay, I wouldn't even go close to the stock. If you read Mark Minervini's first book, if you read Mark Minervini's second book, the basic criteria, which is the trend template criteria, which he talks about in his book, the relative strength has to be more than or equal to 70, and this is 64. It takes me less than a fraction of a second to reject a stock. I wouldn't even look at the technical analysis. I wouldn't even look at fundamental analysis. Forget liquidity analysis, market analysis. Okay. What does relative strength mean? See, relative strength means the stock is doing better than 64% of all the stocks in the Indian stock market, which also means that there are 36% of stocks out of the total stocks in the stock market which are doing better than Anand Rathi. correct? 36% of the stock market, 36% of 5,000 stocks, which is roughly 1,500 stocks. So if there are more than 1,000 stocks doing better than Anand Rathi in terms of price performance, why would I waste my time with the company? So please understand that you first have to determine what is your selection criteria. So I have been repeatedly telling you since the past 4 or 5 videos, buy a small diary. In that diary, make 5 pages. First page, you write comparative analysis. Second page, you write technical analysis. Third page, you write fundamental analysis. Fourth page, you write liquidity analysis. Fifth page, you write market analysis. And then spend time watching my videos and fill up this diary. Okay, one by one, create your own criteria, not my criteria, your criteria. I might say relative strength 70, but you might want to look at stocks which are having relative strength of 80 or more. I might say group rank of less than or equal to 100, but you might want to look at only those stocks where the group rank is 40 or less than 40. So you decide, you have the freedom to decide. Okay. Once you understand the concept, you will decide what to put in that criteria in those 5 pages. And once those 5 pages are ready, you only look at those stocks, okay, which fit your criteria. So you allow the stocks to come to you. So something like Anand Rathi, I wouldn't even waste a fraction of my time, fraction of a second of my time looking at this long base. Agreed, it's a long base. It is the first base. It can break out and things like that. But that is not the stock that I'm looking for. Moreover, if you look at the moving averages, we want the blue, the green, the red, correct? So the blue line should be above the green should be above the red. So let's go to trading view to have a better idea of where the moving averages are placed. That's the basic non-negotiable criteria. Read Mark Minervini's book, you will understand. So Anand Rathi. Yeah, have a look at this. Okay, let me remove the drawings. So what is the blue line 4073? If you look here, it is 4073. Then green line is 3942, red line is 3938. So yes, the blue is above the green is above the red, and the price is above all the three moving averages, and all the three moving averages seem to be moving up, right? But count the number of points in the base. Point 1, point 2, and point 3. That's it. Just 3 points in the base, right? So we need minimum 4 points in the base. Plus we want the buy point in the green zone, right? So there are too many violations in this stock for me to even consider the stock. So for me in practical real life, forget about rejecting the stock. The stock doesn't even come in my filtered list. Okay, forget about reject, which means I'm not even spending even a fraction of a second on the stock. Okay, and my YouTube subscriber is asking me, what should I do regarding this base? Okay, so this is the difference between education. One person is educated, he knows what to look for, he has his criteria set. Another person is not educated about the stock market, he doesn't know what to look for. If he doesn't know what to look for, first he should decide what to look for and then look at stocks. Right? People do the reverse. People look at some company, it's a well known company, it's a well known name, brand, and everything, and then they decide what to do. Okay, and people have their priorities mixed up. Some people are looking at market smith and they want to invest, okay, without looking at the balance, without looking at the relative strength and all. They want to invest their money. Well, MarketSmith is ideally not a platform for investors. It is a platform for positional traders. It is a platform for swing traders. Investing is something different. Investing is where you don't have to look at the chart. For investing, you just need to understand what is the business, what is the quality of the management, and what is the valuation of the company. And if the intrinsic value of the company is more than the market value of the company by a good margin of safety, then you can consider buying the stock. Correct? But as far as positional trading is concerned, swing trading is concerned, this stock doesn't even come in my radar. So again, the reason why I continue to make rejection videos is because when you reject 100 stocks, you will get that one stock which is truly worth your time. Okay, that is a stock you should be spending time on. It's okay if you want to read the annual report of the company, you can read it, but first get it qualified on MarketSmith. Okay. So that's what I wanted to mention. So just to answer the question, I wouldn't spend my time on this stock. Let it go up. Let it create another base, let's say second base. Let the relative strength improve. I have not even spoken about the group rank. Okay. So too many violations. Okay. This is not what I'm looking for. See, if I ask you to choose a fruit from a fruit basket, let's say I ask you to choose orange from a fruit basket, what are you going to look for? You will look for an orange, right? Will you look for an apple? Will you look for a pineapple? No, you will look for the orange because I asked you to look for the orange. Similarly, consider the stock market as like a fruit basket. Okay. In that fruit basket, I'm looking for a specific kind of a stock, which is comparatively strong, technically strong, fundamentally strong. It has good liquidity and the market conditions are favorable. When all of these conditions come together, I pick that fruit, I pick that stock in my portfolio. It's as simple as that. It's a very simple process. Okay. Do not make it complicated. As I told you, get a diary, buy a diary from Amazon, create 5 pages in that diary, write down comparative, technical, fundamental, liquidity, and market analysis. Put your criteria and only look for stocks that meet that criteria. You allow the stock to come to you. You don't go to the stock. If you start chasing stocks, I have no prayer for you. You have to create your own criteria first. When the stock comes in your criteria, you take a decision. Okay. So that's what I wanted to discuss about Anand Rathi. I will see you in the next video.